And Houston homeowners don't know what they'll find when they return to their flood-stricken homes. And what they do find may determine if they actually stay there. If Katrina is any guide, a lot of mortgages will go unpaid. Diana Olick has some numbers.
All that water may as well be ice to the Houston housing market because everything is frozen in place. Banks from Wells Fargo on down have stopped all closings on home sales and mortgage refinances as the houses have to be assessed and potentially reappraised. And paying your mortgage is about the last thing you're thinking about if you're a Houston homeowner.
In a lot of these homes, and given the level of flooding, you may have individuals who'll be out of their homes for weeks or months.
In the Houston area today, there are more than twice as many mortgaged properties with nearly 4 times the unpaid principal balance than there were in the Louisiana and Mississippi counties hit by Katrina in 2005. The majority of these Houston homes do not have flood coverage. If you take Katrina as the model, over 75,000 Houston borrowers could be unable to make a mortgage payment within the next 2 months, and 45,000 could become seriously delinquent on their loans within the next 4 months, all according to Black Knight Financial Services. Fannie Mae, Freddie Mac, and FHA, which back the majority of loans in the area, have already said they will offer loan forbearance for at least 90 days, which means you don't have to pay the mortgage, but the interest does accrue. And it doesn't solve the problem long term if the house is totally destroyed or a borrower loses income because of the storm.
Houston homeowners today have more equity in their homes than Katrina homeowners did just because of stricter underwriting today and higher home prices. So they should have the incentive to stay and pay. But if the amount of losses they suffer on their homes is higher than the equity they have, they could still walk away. For Nightly Business Report, I'm Diana Olick in Washington.